All right. Well, I'm showing one after, and I know that this is being recorded, so those that come in late will be able to catch up. But we'll get started. So, welcome everybody, and thanks again for choosing to invest your next hour with us today. My name is Jonathan Warren. I'm the Director of Revenue Operations here at Captivate IQ, and I'm honored to share the stage with Adam and Sean, a couple of practitioners that I've got a whole lot of respect for, and I'm really looking forward to the conversation today on annual sales planning. As far as an agenda goes for the day, I'll briefly cover a bit of our session housekeeping, and then I'm going to let our panelists share a bit about themselves. Then we're going to really jump in off the deep end and talk all things end-to-end sales planning before we wrap up with some key takeaways, and then hopefully, as time permits, get into some Q&A from y'all. So, from a housekeeping perspective, today's session is being recorded, as I said, so feel free to take all the notes you want, but know that we will share the recording with y'all after the session concludes. Please take advantage of the webinar functionality here to submit your questions that you have in the Q&A or the chat box. We've got a team standing by. They're going to monitor what comes in, aggregate as much as they can for us so that as we get towards the end of the session today, we're able to hopefully address some of those questions that have come in. And lastly here, if you haven't already done so, please go ahead and give Captivate IQ a follow on LinkedIn. That's where we'll continue to share sales planning best practices. That's where we'll post about similar upcoming events. And while you're on LinkedIn, please also make sure to go ahead and give Adam and Sean a follow as well. So with that said, we're going to go ahead and get into those speaker intros. So Adam, let's have you start us off, then you can kick it over to Sean, and I'll bring us home.
Sure. Hi, everyone. Adam, I lead RevOps at Bloomreach, have been in sales finance or sales ops, RevOps for the past 12 years or so, including starting a go-to-market planning function at Amplitude. And yeah, great to be with you to talk today.
Awesome. Thanks, Adam. My name's Sean Lane. I'm a founding partner at a go-to-market services firm called Beacon GTM. We help founders and revenue leaders to improve their go-to-market execution. And I was just chatting with these guys. We're doing a lot of stuff with planning right now. And so spent much of my career building out RevOps teams at fast-growing companies, spent 5.5 years at a company called Drift. I was at a restaurant technology company called Upserve before that. And so excited to have crossed paths with both you guys and be hanging out today.
Awesome. Thanks both. Super excited again to have y'all join me for the conversation. For those of you whom I've not yet met, my name is Jonathan Warren. I'm part of the strategy and operations team here at Captivate IQ, where my team right now is in the early stages of what will be my third annual planning season here at CIQ. So I'm really looking forward to this well-timed conversation. And I'm excited that I've conned these two experts into an hour of free consulting under the guise of thought leadership. So I'm thrilled to have you guys here. Before we get any further, we have a poll. And so we'll give you, the audience, a minute or so to respond here. Question is, assuming that this is annual planning season time and you've got a fiscal year that's going to kick off in either January or February, where are you at right now in your process? Maybe you haven't started yet, and the fact that we're even talking about it stresses you out, but that's why you're here today. Maybe you're early stages, but there's still plenty left to wrap up, or you're nearing the tail end. And if I see too many C answers here, I'm going to start to question the honesty of our audience here. But while we let a few more submissions come through, let me pick on you, Adam. Where are y'all at Bloomreach from like a planning perspective right now for the next year?
Yeah, I think we're on a January 1st fiscal year start date. So we typically like to get these things kicked off either the last week of July, first week of August. I think we tracked towards that this year and did that this year. And so I guess 3 months later, almost, we've kind of arrived at our final tops down plan. We've kind of done the required vetting of that and kind of the stress testing of that, and are now ready to kind of go into the next phases of planning. So territory carving, quota setting, comp planning, all of those things. So feel pretty good about where we're at currently. obviously a lot of work that still needs to get done. But overall in a good spot, I think.
Yeah, absolutely. Okay, good to hear it. It seems like a lot of our audience is in a similar position. Maybe a couple people that haven't started yet. And maybe today we can officially count this as you kicking off your annual sales planning process. But a lot of folks that are still in those early stages. So again, I think the timing of today's conversation is perfect given where we are in the calendar year. And I'm certainly looking forward to having the chat with y'all. So as many of you know, sales planning can make or break your year before it even starts. And so it's not about setting goals, or at least just about setting goals, but it's about aligning resources, targets, incentives to create a cohesive strategy. And when that's done right, it can bring clarity to your entire team and maximize your results. So while this process can be daunting, I know it can be for me when I think about it in its entirety, we like to break it down into these 5 different components, and that's kind of how we're going to structure our conversation for today. So the way we see it, the process often starts with this top-down budgeting component where leadership will set revenue goals and financial constraints, and that will give us a framework to operate from within. The next area is capacity planning, or you might hear us call it headcount planning today. That's where we're going to ensure that we have the right number of sellers in seat to meet those targets. And then oftentimes in parallel with the headcount planning, we'll be doing our quota setting and quota planning and set ambitious but realistic targets based on a number of things, including seller capacity, market opportunity, et cetera. From there, we'll move into territory planning. That's where we're going to actually strategically assign our sellers to maximize our market coverage. And finally, we'll close with a focus on incentive compensation design, where we need to create and deliver compensation plans that will drive the team to hit their quotas and stay aligned with their company goals. So these 5 steps together create a comprehensive, effective sales plan. And before we go one by one through these different areas in detail, I want to talk more high level, at least briefly, about some best practices and common challenges that we should be aware of for a successful planning cycle. So Adam, I know for me as an operator, it can be tempting to sometimes just be a spreadsheet superhero, put my head down and do a ton of this work like in a silo. But I'm curious, in your experience, who else from the org, which different teams need to be involved in the sales planning process?
Yeah, I think there's quite a few. I think the obvious one is finance. I think RevOps and finance, or sales finance, share a lot of responsibilities in this process. And the more you work together, I've always found has the most benefits. If everyone's on the same page and speaking the same language and using the same, vernacular for how you're talking about the plan and how you're kind of assigning targets to teams, I think that's tremendously helpful. That's kind of the core one. Obviously, the exec team as well. I think some of the ones that get left out of the process in some situations would be like the product team. So if you're releasing new products or new features in the coming year, you obviously want to know like what the monetization strategy is behind that, how that's going to impact your like capacity planning or your tops down budgeting. I think also, like, depending on where your pricing and packaging team sits, that could be another one that's very critical to the process. If you're going to be making changes to how you sell your product or how you package it, and kind of how that goes to market, that could also have a big impact on some of these different steps in the process. So ensuring that team is on board is a really critical one.
Yeah, I love that, and totally echo the product often being left out. I might also add that some other kind of go-to-market teams, whether it's marketing upstream or success downstream, if you're making changes to your coverage models, if you're making changes to maybe segmentation and you're wanting to keep it consistent and aligned throughout your customer journey, you're going to need that buy-in and alignment. The sooner the better, right? So absolutely, it's a very cross-functional process. So we don't want to let the inclusion of the word sales in this planning by any means distract from that. Sean, I've learned the hard way how difficult this process can be without accurate and complete data. Are there any best practices that you've seen in order to kind of help ensure that the data remains clean and consistent throughout the year, so it feels like less of a recurring fire drill?
Yeah, I mean, I think the key thing you said there is just planning is hard, right? And so we should just go into today's conversation acknowledging the fact that everything we're talking about today is really hard to do well, right? You're going to do it. The question is how good of a job you're going to do as you're going through this process. So acknowledging, especially if maybe your first cycle at the company that you're at, it's going to be really hard. So to your question about data, I think that's one of the key prerequisites before you can even get into this process. And depending on the maturity of your company, you might not have this rich history of data that you can look back at and feel reliable. It feels reliable to inform your planning process. But I would say whatever that period of time is that you can feel comfortable in, use it, right? Even if it's 3 months, 6 months, at least know that you have a starting point of reality. And then the other thing that I would say as a way you can kind of build this into the design of your RevOps team is this data is not only important right now in Q4 as you're going through this, right? This is something that is going to be important all year round. And planning, while we spend a lot of time and effort on it during this part of the year, is also a year-round thing. And so one thing that I recommend folks do is actually build that into the design of their team itself, where there are folks in your RevOps group who are dedicated to planning. And that might sound weird because we're talking about it through the lens of just like this one big annual planning cycle. But every time somebody gets promoted, every time somebody leaves the business, every time somebody switches teams, there are ripple effects on your planning process. And so if you have folks on the team who are dedicated to planning for and dealing with those ripple effects, I think it makes life a little easier, and you don't find yourself so caught off guard when all of a sudden people haven't been paying attention to this for 6 months and now it's like, oh, it's planning time. Let's all put our planning hats on. You have people on the team who have that hat on all year round.
I love that. Yeah, maybe a luxury that some small businesses can't afford, but at least having some intentional focus in that area, because I've seen some numbers, and it's a staggering amount of decay in, like, from a territory standpoint. What was it, this pristine thing that you shipped in January? By the middle of the year, like, all those different changes that you highlighted can completely be something different. So whether or not you're running some sort of actual quarterly refresh where you're shipping changes, you should, in an ongoing manner, at least be mindful of how those changes are impacting your business and informing how you prepare in the next cycle, right?
Yeah, and maybe that person, they're then focused on the data enrichment strategy for the company, right? And you might have, a vendor that you're trying to move away from, or 2 vendors you're trying to consolidate. And the last thing you want to be doing is doing that work in October, right? If you're doing that work in the first half of the year so that the foundation has been laid by the time planning season comes around, you're going to feel much more prepared. And so those are the types of decisions and projects that need to be happening throughout the year in order to, set you up for success at this time of year.
Love it. Fantastic. All right, let's dive in then. We're going to go kind of piece by piece here. We'll start on the left with our top-down budgeting. And Sean, I'll start with you this time. Can you share a bit of perspective on what the top-down budgeting process has looked like for you in some of your past roles, and then also speak to some of the common challenges that we need to be on the lookout for here?
Yeah, absolutely. So typically a top-down version of this plan is a target that's being set either at the board or executive level. They're coming back to the team and saying, hey, we need to 2x next year. Like, go figure out how we're going to do that, right? And it usually starts with a top revenue number, and everything else kind of goes from there. Or maybe you have a top a burn number or a cost number that you're trying to plan towards. Those are typically the ways that someone might set a target from top down, then hand it off to the team and say, go figure this out. A couple of things that I would keep in mind here. One is, I think it's very much on the senior leadership team to bring to the table what are some of the kind of big bets or strategic initiatives that we are planning for next year that can serve as inputs to the rest of the team when they're building this plan, right? If you just say we're going to 2x, but like there's no new products coming, or there's no big initiative to move into a new geo or something, right? It can be really hard to pull that off. And so I would say, when we talk about the prerequisites in the previous question, having clean data is one. Having those big bets and strategic initiatives from your executive team is another one. And some of the people here today are going to be part of the decision-making process of what those big bets are. And many of us are going to be recipients of some of those decisions as well. And so all the more reason to make sure that you have those as you're coming in. And then the other thing you got to be careful about always when you're talking about top-down planning is that the plan is starting from a point of reality. And we'll talk, I'm sure, about how we can start to reconcile a top-down plan with a bottom-up plan, but that's the starting point. And again, going back to the previous point about data, can we know how every key conversion rate in our funnel, every milestone in our funnel works so that we can come to the table with a really smart point of view on what that starting point of reality looks like and start to make some assumptions from there. So we can talk more about that, but like I think those are some good starting points.
Yeah, I love that. Hand up, I'll be the first to admit that early in my career, I got the tops down number. I plugged it into a spreadsheet and just said, sure, this is how we solve that problem, right? We can throw bodies at the problem. We can uptick our ASPs and our win rate. And I can tell you a story where this checks out. But then, as we'll talk about on the bottoms up, if you can't also tell a realistic story from a capacity standpoint, actual selling time standpoint, understanding how many SQOs your team can actually fill in the pipeline, all those things, you're going to be, if you're too far apart on those two areas, you're going to be solving for a world of trouble. So Adam, anything that you'd add to Sean's lists of gotchas here from a top-down standpoint?
Yeah, I think everything Sean said is spot on. I mean, I think from a RevOps perspective, the most important thing you can do is double check that like the tops down plan is based in reality. One thing that I like to do is like, depending on how great your relationship is with finance or how much they're willing to share with you ahead of time, I'll almost make a simple calculator on the back end ahead of that meeting or to be prepared for that meeting where you do receive that first tops down number. And I'll just have things in there like, what is our historical productivity been? How many people do we have ramping today? And then I'll like leave myself some inputs for things like TBHs. And I'll just do some simple math as I'm looking at the plan on a Zoom or, on a TV in the office. And I'll just start plugging in numbers and just look at it from my point of view. Like, okay, given this plan, given what I know about how reps have performed historically, given what I know about, what we can do or can't do in terms of hiring, like this is what this plan is going to imply. Like it means a X% productivity lift, or it means a Y% like ASP increase or a Z increase in win rate. Having those like rough high level metrics kind of at your disposal when you're in that first meeting, I think will kind of help guide you to the right place and will help get you there faster, which I think is the most important part. Because what you don't want to do is spend 6 to 8 weeks validating the top down plan and then get to the end and say like, okay, this is not a realistic plan and we need to start over. If you can start to sort of chip away at that potential issue ahead of time, that saves everyone a lot of time, everyone a lot of effort. And I think, some people may not like your responses initially, but I think in the end, it'll get you to the right place faster and everyone will appreciate the RevOps team a lot more in that situation.
A RevOps leader who likes to be armed with numbers, go figure. Yeah, I like that a lot. I think that, Adam, that ties nicely into our next section here. So I'll click us forward. We're going to talk about these next two areas a bit together because they're often done, at least in my opinion, in conjunction with one another, specifically quota being like a critical variable in the scenarios that you're going to model out from a capacity or a headcount planning standpoint. So Adam, our pretty little graphic here shows that these things are sequential and downstream from the top-down budgeting piece, but is that actually how it always happens in practice? Because what I think I heard you just saying is you kind of like to at least have a rough idea of where some of these things are going to land to inform that. Maybe it helps kind of circumvent that more drawn out back and forth, and we can kind of just cut to the chase a little bit quicker.
Yeah, I mean, I think the order here is definitely right. I think if you wanted to play with it visually, you might have the chevrons kind of overlapping each other because these things do all happen at the same time. And I think with quota setting specifically, that's a piece that I think gets left out a lot and just becomes like a math exercise. Like, okay, we have our headcount figured out. We have our capacity figured out. We have our tops down plan figured out. let's just do the backwards math and set quotas accordingly. That never works as well as you want it to. I think you have to have a lot of kind of thoughtfulness and consideration with quota settings. It's not just X% on top of the tops down plan. I think you have to look at like what the historical performance has been. You can say like, yes, the plan's going up 10%, headcount's going up 10%. We can leave quotas alone, or rough math like that. But I think you have to look at it at a much more granular level. If you have segment breakouts, if you have regional breakouts, different kinds of AEs, new business versus existing business or expansion, you kind of have to look at each of those groups individually and say, this group has not hit their number this year. We can't just apply the same like peanut butter spread quota lift on them that we're doing to everywhere else. So I think you really have to be more targeted and more thoughtful about how you do quota increases or reductions, and just making sure that you're applying the right levels to the right people, and everything is kind of grounded in like logic and sense that, I think working with sales leaders, they always have very strong opinions about quota setting. But I think, being the realistic kind of in between layer between finance, who is just going to want to do the math, and sales, who is just going to want to do reductions, honestly. I think that's a really helpful place to be, and kind of puts you in the right place for a RevOps team and for a planning process in general.
Fantastic. Sean, what about you? What are some of the key factors that we need to consider when planning quotas?
Yeah, I think Adam hit on a lot of good stuff there. I'll add a few things. I think first, making sure that everyone's starting from a point of reality, just like we said with the operating plan. How do we know exactly what our productivity per rep was, and to Adam's point, on a specific per role basis in the past year? And then you have to make sure that you're looking at that in a nuanced way, right? If you have a brand new team that is mostly folks who were ramping last year, you have to look at their productivity in a very different way from folks that were fully ramped. And so you should be able to break down your productivity per rep metrics by product or by business unit, by ramping versus ramped, and make sure that those are nuances that you're taking into consideration as you're building out the next year's plan. And then you talked a little bit before about, in the tops down plan, kind of validating some of the key assumptions that are built in. This is a really important place to write those assumptions down. And I would literally have a separate tab in my spreadsheet that had the operating model in it, that we wrote down on a per business unit basis what the 2 or 3 key assumptions would be. And so if our key assumption is that enterprise productivity per rep is going to go from X to Y, the plan does not come true if that assumption doesn't work, right? And so you have to bring that level of kind of spotlight and focus to this thing if that's what your plan relies on. And then I think another thing to keep in mind here is, just because it's in your plan in November does not mean you should follow it blindly in April or May, right? And so what I used to do is I would have a quarterly check-in with me, the sales leader, CFO, where we basically at the end of each quarter sit down and look at our productivity per rep metrics in each segment. And we would have this red or green moment. If it's in the green on your productivity expectations in a particular segment, great, keep going with your plan, you're good to go. If you're in the red, don't just keep hiring more people for that team. Stop, figure it out, because otherwise you're going to end up in a situation where you have an inflated team with low productivity and pull that thread, and things only get worse from there. So I think those are some really important things to keep in mind. And then one other group that I think we didn't talk about when we were talking about cross-functional partners is you got to bring HR and recruiting into these headcount planning conversations, right? Because they've got their own funnel that they got to deal with. And if they have some aggressive hiring targets that the plan doesn't work, if they don't come true, then you need to pull them into these conversations and then work backwards. Okay, we got to have them in seat by this point in time. They're going to have a 5-month ramp once they get in the seat, which means we got to start interviewing for this role 3 months before their first month. So there's a lot of little kind of ripple effects that if one thing goes wrong, a bunch of dominoes fall and you're going to be behind before you even get started.
Huge
that's a really good point. Really good point that Sean brought up, and it just brought back a memory from my past as well. Capacity planning, you're thinking about sales, AEs, AMs, SDRs, all your go-to-market roles. But recruiting also has their own capacity planning, right? They have to have the recruiters in seat in order to hire all the heads that you need for your plan. And that's something that, at smaller companies, ones that are growing very quickly, can become very challenging. And so that's where you need to be out in front of this and have those conversations with HR recruiting like very early, because a lot of times I think you make up for that potential gap with like agencies or external recruiting. And that's something that the earlier you start, like the better chance you have to get those heads in the door and kind of hit your plan for sure.
Yeah, great points. Next question, either of y'all can answer this or both, but I'm curious, when I'm doing capacity planning and quota setting, oftentimes I'm using an assumption, a metric that I've used in the past, same orgs or different orgs based on industry benchmarks, but there are a couple of things that I need to plug into my models. One is what my rep participation will look like. So do I expect that 7 out of my 10 reps will hit above a certain threshold, or is it below? And the other piece is like quota over assignment. So how much of our roll up on the street do we want to have in excess of the board target? What are we trying to solve for, knowing that not everybody will hit 100 plans? So to either one of y'all, are there benchmarks that you're using? And if so, I'm sure there's some, dependence on company, model, size, fit, all that. But how, if at all, have those changed with maybe some macro conditions in the last couple of years?
Yeah, I'll go first, Adam, and then go ahead.
Yeah, I think it's become very difficult over the last couple of years. I think there was a string of years there, 2018, 19, 20, 21. Things were just up and to the right. It was very easy to just kind of add reps, plug them in, know they were going to produce. Spending was happening at customers that are willing to bring on new tools or pay more for existing tools, add seats, add volume, whatever it was. And it was very easy to do that. And I think what's happened 22, 23 this year is hiring has kind of been reduced a lot. Spend has been reduced a lot. And it puts you in a weird place from a planning perspective, because you're seeing lumpy results or downward trending results or flat results. And I think a lot of companies have kind of slowed down their hiring. And what that means from just like a math perspective is it's very hard to hit those same quota over assigned numbers that you were wanting to get to in the past. If you're just hiring, 30, 40, 50% more AEs or AMs every year, it's pretty easy to know what those quotas are going to be, know you can get those people in the door, know you can start them. And I think several companies I've worked at recently have kind of cut hiring mid-year. And that just makes it harder to get to that quota number. And so I think benchmark-wise, back to your question, Jonathan, I think those numbers have come down a little bit. It's just hard to get to, 25% over assign or 20% over assign for AEs. It's harder to get to like a 10 to 15 over assign number for existing business or expand AEs or AMs, and kind of blended in that like 15-ish% range. It's just really hard to get there now without jacking quotas up on people and just kind of blindly raising them. So I think this goes back to what we were talking about earlier, just being very thoughtful and kind of how you design quotas, how you set them, where you raise them, where you drop them, and ensuring that everyone's on board with that, right? Because, differing attainment assumptions or quota over assign assumptions, those will have implications on costs in terms of like cost of book or how you pay out your commissions. The finance team will be very interested in that. It also just comes with more risk, right? Less over assign means you're closer to the plan, and you're going to need something closer to 100% attainment to get to that. But yeah, you're playing with fire a little bit on some of this, and it's you got to pull a little bit on a bunch of different levers to kind of get to that point.
Yeah, I think I agree with all those ranges that Adam gave. I'll throw out a couple other kind of benchmarks. First of all of these numbers are kind of checks and balances on each other, right? And so it's very hard to thread the needle to say, oh, I'm meeting every single benchmark that I need to meet across these 4 or 5 different metrics, right? So if you're, nailing the 15, 20% over allocation of quota, then the next question is, okay, how are we performing against those quotas? And so some targets that I like to use, and they're aspirational, but I think they're good targets to have, is 75% of reps at 75% of quota and 50% of reps at 100% of quota. And again, difficult, but you can use those as kind of your North Stars for what percentage of your team is going towards those. And then the other thing, especially in the last few years, as performance has struggled and productivity has gone down, like there is a floor to what you can do on the quota side of things. And so I think the final check and balance there for me is the idea of a quota to OTE ratio, right? And so, the benchmarks will tell you want that to be 4 or 5x quota to OTE. But like at a certain point, you got to set a floor for what your finance team, what your organization is comfortable with. And so you might say, all right, look, like our productivity numbers do not support raising or even keeping quotas flat this year compared to last. They've got to come down in order for our team to have a chance of hitting their targets. And we cannot go below 3.5x quota to OTE ratio, right? The business just cannot sustain it. And so I think figuring out kind of what those ranges look like in your business and having that really strong finance partnership that Adam was talking about to know, hey, like what can we actually pull off here, are really important ingredients to make sure you get that right.
Yeah, absolutely. Threading the needle is a perfect analogy here for the whole conversation, but certainly for trying to land the quota piece of it. So back to you, Adam. What are you doing to make sure that your quotas strike that right balance of challenging for the reps, but also still attainable and something they can be hopeful and want to stick around to earn?
Yeah, a couple of things. I mean, Sean just brought up one of them, which is that quota to OTE ratio. That's a hard conversation to have with sales leaders specifically, where you start to get down to that lower end and you have to tell them like at this level, it just doesn't make sense to have that incremental person here, or it doesn't make sense to have like this many people on the team, especially when you start to get to like existing business and you know how many accounts you're talking about or how much ARR you're talking about with some of those individuals. That's a really good benchmark to use. I think in terms of setting them in the right way, it kind of depends on where you are in terms of the segment of your business or where you're selling to, but also the segment of the rep, right? So like for more mid-market or SMB reps, you're talking about more high volume sales, like more kind of peanut butter spread transactions where you're looking at kind of like a standard ASP, and it's really just about how many deals can they do a month or a quarter. And so I think with those individuals, you're looking at like, what's our ASP? What's our win rate? How many deals can we realistically get to them a quarter? How many can they realistically work a quarter? And so if you're talking about, like high volume sales, we can get them 12 stage 2 opportunities. We're going to win 25% of them. That means they're going to win 3 deals a quarter. If that's the right number, setting their quota somewhere around that makes a lot more sense. I think once you get up to the enterprise level, you're talking about much more like lumpy performance. On a quarterly basis, it's probably going to change a lot, but on an annual basis, you're hoping that they close, X amount of deals, and looking at that ASP again and just saying like on an annual basis, if they're closing this many deals and that those are at our ASP, that makes sense to us. And that quote is in that kind of 4 to 6x range of their OTE. You feel pretty good about where you are, but I think also very important with this is looking back to previous years, previous quarters, seeing where quota attainment has been, what those levels were, how people performed against that. I think the one thing that you really, really do not want to do is look at past performance, see a lot of like 60, 70, 80% numbers or lower, and knowing in the back of your head that you have to raise quotas somewhere. That's the one situation where you want to avoid, is just like raising quotas, no one's hitting their number, and saying we had to do this, to make the numbers work. That just means something somewhere else in the process is missing or broken, and that, whether it's headcount or the tops down plan is spread incorrectly. You've got a lot of different levers there that you can pull to kind of get those in the right place. But yeah, I think mixing in all of those different factors for setting a challenging but attainable quota is kind of where the math comes out.
Totally. And reps are smart, right? Like it doesn't take, they're going to do the math and they're going to say, nobody on our team is hitting it now. And now you're telling us this is going up. Like what gives, where are we not rooted in reality, to take it back to where it was earlier? So Adam, I'm curious, I want to pull on the thread. You talked about or you highlighted the lumpiness of enterprise and like longer deal cycles and some of the impacts there around planning. Does that impact how you think about the time horizon in which you're setting up quotas? Like is an enterprise team quoted or goaled on an annual number versus a high velocity team more maybe monthly, but more so like quarterly? Have you seen that mix within the same org?
Yeah, absolutely. I mean, I think this comes, we'll get to incentive design here at the end, but this is definitely a part of that as well. And I would say that incentive design chevron really kind of overarches over all of these different pieces here. But I think on top of what you said, like it depends on where you are as a company, right? If you're, Series A, Series B company growing really quickly, you're going to change your comp plan at least every quarter, or you're going to change your targets at least every quarter. So it makes more sense to have, more frequent quota periods for that. Monthly, if you're inside sales, SMB growing very quickly, monthly might make sense for you, especially if you're a smaller company. But I think once you get to a certain scale, whether that's Series C or higher, I think maybe in that $25 to $50 million ARR range, you're probably going quarterly for your SMB or mid-market commercial teams, and maybe quarterly for enterprise. It kind of just depends on how long those sales cycles are. I think what you're seeing now in the market is just sales cycles are increasing in a never-ending way in a lot of cases. And so if you've got enterprise reps that are having 120, 150-day sales cycles, there's no reason to have them on a quarterly quota, right? Like it's just not going to happen. They can't make the moves they need to make to get that deal in the quarter. So you're really looking at a more annual plan there. And that does make it more hard to plan for quotas. But I think something that we do and something I've done in the past is, forecast a certain percentage or a certain quantity of kind of whale deals. So however you define that as a company, if that's a $250K deal, if that's a $500K deal, if that's $1 million deal, baking in a certain number of those, knowing that from an attainment perspective, there's people that are going to blow their number out because of those whale deals. But also just from like an ASP and win rate perspective, you can kind of build in those whale deals, assuming that you're going to close X number of these large deals. And that'll kind of take some pressure off the rest of the business and allow you to kind of be more flexible with how you're planning for that, and also more flexible with how you plan for quotas, specifically for enterprise.
Sean, what would you
Such
add?
a good example. I was just going to say, like, everything that Adam just walked through is such a good example. If you're listening to this, right? Like, think of all of the different business context and nuance that Adam has to know in order to piece together everything he just described, right? And it's not just quota setting, right? It's quota setting in conjunction with the pipeline targets that we need 2 to 3 quarters before those quotas are real. Because if we don't hit the pipeline targets 2 or 3 quarters prior to that, there's no way those reps are going to hit their target, right? And so, like, there's all of these connective pieces that you have to take into consideration when you're going through this exercise. And I think if you pull that thread a little bit further, a mistake I made for forever is you put sales on this island with this 20% over allocation of quota, and you're going to have a bunch of people who aren't successful, and maybe the company still is, or maybe marketing appears to be in the green when reps are feeling in the red, and like there's no faster path to sales and marketing strife than in a situation like that. And so something that I've started to do and then now recommend to others is I would actually extend any sort of quota coverage you give to the individual reps on your team. I would extend that to your marketing team, right? Them hitting the operating plan's pipeline target does not help all of your reps, right? And so I would actually extend that even further and give that same target in order to make those reps successful to the marketing folks in order to make them successful.
I never thought about that. I love it though.
It's a tough sell, but I think it's the right thing to do. I've tried to do it in the past. I've been unsuccessful, but good luck, Jonathan. And that's a really good point, John.
All right, maybe last question here in the quota and capacity planning section. Sean, I'm curious. We've talked about like some difference in behavior based on sales cycle. So whether you're segmenting your team by by market size, by business unit, product. What are the factors that you're thinking about when setting quotas for reps like across different market segments in your business?
Yeah, so I think it's a bunch of the ingredients we've talked about, right? It's kind of trailing X number of months or quarters performance, right? What's our starting point in terms of an average? What is our productivity per rep expectations in the new plan? And is there a delta between the two that we need to either have a conversation about or find a way to bridge the divide? What is the quota to OTE ratio of those folks? And then what is our expectation around attainment, whether it's productivity per rep or percentage of reps at a certain level of quota attainment, right? Like those are the kind of like 3 or 4 puzzle pieces that you mess around with until you land on a number that you feel good with. And so doing that exercise for every single segment or every single business unit role, however you have your team set up, to me is the right way to do that. The other thing I would just be careful about there, right, is, well, we're going to talk more about comp, but a base thing that you need to have is some level of stratification or bands in comp for the different folks who are in those roles. Because if you're walking in with a team that has crazy different base and variable numbers, but you're trying to hand them the same quota, like your quota to OTE ratio is not actually that helpful to you, right? And then you're going to have even more difficult conversations about why some people's percentage down the road is much higher or lower than the others. And so another kind of year-round planning input there is to make sure that if you're going to set quotas on a per product line or business unit or whatever basis, that the salaries of the folks in those roles are in line with one another.
Certainly makes it easier on our end too when you've got the same number, the same multiple. You're not trying to maybe keep some of those metrics as secret for fear of people figuring out what each other are making, right?
At least in the same ballpark.
Yeah. All right. Super meaty topic here. Before I go on, any last words of wisdom or spooky things that the audience here needs to be mindful of from a headcount and quota standpoint?
I think one of the things that Sean brought up, and I think if you take nothing else away from this session, just looking at that tops down plan and what that means for productivity per rep, I think that's the number one thing that kind of gets lost in the wash of planning is like almost always that initial tops down plan or even version 2, 3, or 4 of that is higher or is going to imply higher productivity on a rep by rep basis. And you really need to have a reason as to why that's going to happen. And I think that that's something that, maybe a few years ago, earlier in my career, I would have just kind of rolled along with that and been like, okay, it's going to go up 10%, 15%, 20%. But that historical data is like built, baked. There's a lot that went into that. And there's a lot of reasons why that productivity is where it is. So if you think it's going to make this big change up or down, you really need to have like those assumptions, like Sean said, like on a separate tab or listed somewhere about like why that's going to happen. Are you selling a new product? Did pricing and packaging improve? Are we able to sell to some new vertical or industry that we weren't able to sell to before? Like what has changed that's going to actually move that number? Because I feel like 9 times out of 10, when you get into Q2 of the next year and you realize that you're off from the plan, you're going to look back at that productivity number and it's going to be the same as it was when you started planning. And you're going to realize that lift didn't happen or that decrease didn't happen. And you're just going to sit there and kind of kick yourself in terms of like, why didn't I bring this up earlier or what assumption are we missing on? So I think that's the number one thing that kind of goes into those first 3 pieces here.
Great advice. All right, I'm going to keep us moving along here. We'll talk territory planning and then wrap with incentives. So when I think about territory planning, we could spend a few more hours just talking about all the different granularities here in territory planning. I think first it's important to think just about territory model selection and how you're going to do territories as a business. So as someone who's personally championed and put forth a variety of different territory models, including geographic, industry-led verticals, product-led verticals, round robin, and named accounts, at least 5 that I can think of. I can tell you that there's probably there are pros and cons to all of them, right? And there's not a single right answer, but I do think that there are some answers that are more likely to be right based on your company's situation. And that's going to be a variety of different things, like your team, their tenure, your average sales cycle length, your mix of pipeline source. Are you predominantly inbound or outbound? Is there a healthy mix? The data that you have available to make some of these decisions and cuts. Do y'all have a go-to model, knowing that everything is going to be specific, but do you have a favorite maybe that you've rolled out? And then if you're going to call it, what is maybe the biggest gotcha or downside to that deployment? Sean, why don't you go first?
So I think what's important, first of all, to your point about just like figuring out what your company's go-to-market is, what's best for you all, like territory planning is a crawl, walk, run process that will take you years, multiple planning cycles to get right. And you'll change it over and over and over again. And so one of the things that I love is when I talk to ops people who've been at their company for a long time, they have the benefit of having gone through a bunch of these cycles, and they have the context of all the decisions that they've made to kind of build their way up to where they are now. And so the first thing I would say is like all those different models that you just described, Jonathan, like if you as a company don't feel good about like who your ICP is and who are the target accounts that your company is trying to go after, like don't worry about territories, right? Like figure out what that set of accounts and companies is first, and then you can get into some of the different territory models. I like named accounts. I think depending on who your customer is, if you are selling to someone that requires more of an in-person sale or an in-person relationship building, then you might have to find yourself in something that's a little bit more regionalized. Like for example, I have a client that sells into multi-location restaurant franchises, right? Like more of those probably should be in person than like, selling B2B software. I don't think it really matters as much, maybe except for some time zone issues. The other thing I would think about is I always try to have the customer experience trump anything that has to do with like my models or data, right? And so one of the things that makes territory planning so hard is in addition to your firmographic scoring or the regions or the industries that you were describing, you also have to take into consideration, hey, has this account had a new CSM 4 times in the last 12 months? Like we probably shouldn't move it, right? Is someone have an open upgrade or expansion deal with this person because their renewal is going to close in 2 months? Like we probably shouldn't move it, right? And so you have to take into consideration all of those different factors beyond just this person gets 5 A's and 12 B's and 25 C's, right? Like you have to build all of those things in and take those into consideration. And honestly, like I don't think that ops folks can do that on their own in a vacuum. You have to get in front of your stakeholders. You have to talk to, at the very least, the frontline leaders who will be the recipients of these territories, and make sure you've had a bunch of cycles with them before these things make it into the books of the people on their team.
Love that. What about you, Adam?
I think a couple things. I mean, Sean hit on a lot of the real ones there, and I think some of the examples you provided, Jonathan, you're lucky if you only have one of those that are making their way into your territory planning process. I think just thinking about one of our regions specifically, we kind of have a Venn diagram of 3 of those that are occurring at the same time to get to the right territories. But one thing that came to mind for me that's really important with this is having a lot of alignment between your pre-sales teams, so like if it's marketing or pipeline generation, demand generation, but also your post-sales teams. So what Sean just said about like having customers that are not just cycling between CSMs, every quarter, every 6 months. Having a lot of alignment with all those teams is so key, because when it comes to marketing, having the right number of accounts in the right categories or the right segments can have a big impact on like what activities marketing is doing to get leads to your customers. So if you have like named accounts or tier 1 versus tier 2, what's the right number of accounts to have in that group? What's the right number of accounts to have in that second group? Because ultimately, like you're talking about people's time, people's bandwidth, SDRs, AEs, they can only follow up on so many leads or accounts or prospects a week or a month. And so ensuring that everyone has alignment on like, what can we do with this group of customers? What can we do with this group of customers, the prospects, and ensuring that they're segmented properly and planned properly from a territory perspective. That is like a big gotcha that I think comes up like mid-year when you're too far down the line to really make changes, and you start incorporating that as next year's plan. That's one thing that really stuck out for me.
Yeah, a couple other things I would add to that. Sorry, there's a couple other quick things I would add to that. Like when I say crawl, walk, run, like all of those examples that you just gave, Adam, like those are the types of things that maybe you don't have to get necessarily right in your first cycle, but you're going to start to feel the pain of like the unsexy things that only ops teams will pay attention and care about, right? Like, what's our policy when it comes to parent-child relationships? What happens if the headquarters is in Spain, but the decision maker I'm selling to is in Washington, D.C.? Like, whose territory is that in, right? And so having kind of looked around corners and anticipated where those problems are going to come is a really big part of territory planning. It's like very tedious rules of engagement type stuff that you have to nail so that you can turn to those rules when inevitably conflict comes up. And if you find yourself in a subjective way having to solve each one of those, like based on when they come up and based on your subjectivity of that day, like you're setting yourself up to make a lot of enemies, right? And by the way, like it's not a good use of anybody's time. And so if you have those rules written down, you turn to the rules, great, this is what happened, we're off and running and back to the work that we're doing. Having that stuff in place will save you a lot of time and headache.
Yeah, couldn't agree more. I think rules of engagement, sales policy could almost be another overlay on this whole graphic, right? Because every component here that you're solving for needs to be documented, communicated, hopefully understood by the field, but if nothing less, you can point them to that when those situations pop up. So regardless of territory model selection, and I want to be mindful of the time here as we kind of round towards the home stretch, but as we think about whichever way you decide to kind of set up your territories, I'm hearing from both of you, there's a lot of kind of exception management that needs to happen, right? We talked about the customer with so many CSMs and the different handoffs. How are y'all handling that? Is it still in spreadsheets? Adam, is there a better way?
Yeah, I mean, I think one thing that I've learned over the years as the spreadsheets have gotten bigger and bigger and bigger and have more and more tabs is building a model that's flexible is kind of key to all of this, because I can't tell you how many territory carving or planning meetings that I've been in where someone will say like, you know, what if we move the segment line from 800 employees to 1,000, and like being able to make that change quickly and have all of the changes flow through, knowing how many accounts are above the line, below the line, being able to answer questions like that is critical, I think, for territory planning. And I think what's interesting is like historically for RevOps, professionals, there really hasn't been another option, and you've been stuck using spreadsheets and you didn't really have a choice. But I think, now we're starting to see that change a little bit, and I'm really excited about, what CIQ is building in terms of that model, because I think it answers the number one pain for me, which is just being more flexible. Obviously spreadsheets have like all kinds of lookups and tables and different things built into it. But when you have like a purpose-built model, it obviously makes this a lot easier and a lot more scalable. And I think, the bigger and bigger some of these software companies get, the more customers they have, the more data they have, the more prospects they have. That just makes scaling the model more difficult. And so having something that performs, much better than a spreadsheet is really, really critical.
Love it. Thanks for the shout out. Your check's in the mail. I'm going to keep us going here, and we'll round out with our incentive design slide. So leave it to the host whose company leads the incentive compensation space to run out of time to really dissect this in full. But let's just do some lightning round, some quick questions here for y'all, and then we'll take a peek at our Q&A here before we hit the top of the hour. So Adam, how's your team identifying if and where you need to make changes in your plans year over year from an incentive comp standpoint?
Yeah, I think the number one thing for me with incentive design is always just ensuring that we keep it simple. I think, being RevOps, being like the liaison for the sales team or the revenue teams, I think you're very, very rarely going to find a sales leader who wants a complicated sales plan that has multiple targets that are carved apart and different. These dollars go here, but these dollars go here. Obviously, there's some roles, some teams where you have to do that. But I think for me, it's always just like, what can we do to keep this as simple as possible, keep as few changes year over year as possible, but also align our goals as a company with the comp plan. So for me, it's always about making small tweaks. If there are certain elements that we're really looking for as a business that we want to hit on, so if that's like multi-year deals or if that's selling services, like those things can be very targeted, small adjustments. If they're on top of the plan, that's great. But what I always try to avoid is like breaking up the plan into like these multiple pieces that all have different moving parts. You want your AEs and your sellers focus on one thing more than likely, which is like selling more business. And if you're pulling their attention in too many directions, that for me just opens up the door for them to like not game the plan, but kind of optimize their earnings for how the plan is set up. And that's not what you want. You want the company's goals and the seller's earning potential completely aligned. So if they're if they're attaining more, earning more against their plan, that is in direct alignment with what you want as a company and the changes you made to the plan. So those are like the quick things that I always think of, and the pushback that I give to people that always say like, why don't we just add this, or why don't we add this, or can we do something in the plan that incentivizes this behavior? Sometimes that's a no, sometimes that's a spiff or something like that, but it's rarely just like, yes, let's add more to the plan.
Sean, we talked a bit earlier about maybe the implications and kind of tactfully handle maybe making a revision to quota, also increase the quota, regardless of what your comp plan changes are. Talk to me about some best practices in terms of just that communication to the field and how you roll it out.
Yeah, I think a great thought experiment for everybody here to do is like, imagine yourself in the first week of January, first week of February, whenever your new year starts, and you're presenting all of the stuff we've talked about today to the team. Everybody in that audience is sitting there wondering, can I be successful here this year? Can I make money here this year? And there's a whole bunch of fear, uncertainty, and doubt about whether or not that's the case. And so your job, as quickly as possible, is to quell those fears. And by the way, if you're doing that in March instead of the first week of January, like, you've already failed, right? And so work your way backwards from when you want that moment in time to be, so that there is as little time as possible from the time the new year starts to when they're off and running. And so taking advantage of that time, really leaning into the fact that you're setting people up for success. You're going to make them feel like they can be successful at your company next year, and then create a ton of opportunities for follow-up, right? Everything that the three of us have talked about today, we're in all the planning meetings leading up to it. All the recipients of this are hearing it for the first time. There's no way anybody can digest all of that the first time you hear it, right? So office hours, live Q&A, one-on-ones if you have to, whatever it takes to make sure that everybody feels really comfortable with the decisions that were made, the big bets that the company's making, and how those big bets are now being translated, to Adam's point, into the things that you're being incentivized to do.
Yeah, I love that. One of the things that I've seen work well, I'm sure it's team dependent, but it's trying to avoid like that all at once kind of approach. And so as much as you can drip some of these changes, and the earlier you can set some of those expectations, you don't want to like just plant that fear, uncertainty, and doubt, and like that just be the constant thing in your rep's head, and they go, well, how bad is it going to be? But if you can more or less just set the expectation like, hey, when things are good, when we're growing, like the natural thing to do is like your world of accounts is going to get smaller. Your targets may go up. They're probably not going back down. And so I think the better expectation like setting that you can do for your team, even ahead of like getting into the nitty gritty details, like that will allow them to focus on the details when they're actually presented, rather than just being in a bit of a head spin because of the overarching themes with changes there. So, all right, we're at the top of the hour. This is not going to automatically kick us off, but I know that folks have other places to be. So I'm going to just click us through here to our final couple slides. From a takeaway standpoint today, we talked about a lot of stuff. So thanks again to both of you. We've highlighted how this whole process is extremely cross-functional in nature. Work back dates are going to be super important. So start early, document your assumptions, get clear alignment, and have something to be able to point back to. We've talked about the importance of data, having it right, having it available, and using that, particularly to root yourself in reality in a lot of these different areas. And there's a ton of different levers that we can pull, but we want to make sure that we're not changing them all at once, because then all of a sudden our change is going to be wildly different from what may in fact be reality. And last on here, we want to make sure that we're leveraging technology to help us scale here. So I think that we've got one final poll. If you're still sticking around, you can go ahead and tell us what tool you're using today to manage your annual T&Q process. And while y'all are submitting there, I'm going to take a peek at our Q&A. Sean, I'll maybe throw this one at you. You talked early in the top-down piece about getting execs involved. What advice do you have for getting executive buy-in when you're recommending a change?
Yeah, I mean, I think like a lot of stuff we talked about with planning, a ton of this just stems from the relationships you build with them throughout the year, right? If you know, to Adam's point from before about that first meeting he had with finance, if that's the big time you sit down with finance and you don't have a relationship with them on everything else that happens in ops throughout the year, like it's not going to go well, right? And so I think really paying attention to those cross-functional partnerships you have throughout the year, so that when this, you know, really difficult time is happening, you've got someone that you're used to working with and trust, and they trust you. And so it becomes this moment of like kind of the ultimate culmination of all that relationship building, where you can have real conversations. You can push back on some of those big numbers that might be being tossed around on the tops down version of the plan, and do it from a point of kind of a quality relationship and quality data to back you up.
Fantastic. All right. It looks like a lot of folks, unsurprisingly, are still using spreadsheets. Adam, maybe our last question here for the day, I'll throw your way. You talked a bit about kind of having a model that can be flexible and dynamic. You mentioned Captivate IQ planning, but when should organizations start to think about looking for a formal solution here to help with sales planning beyond spreadsheets?
Yeah, I mean, I think there's no right answer that's applicable to like every company, every situation. Everyone's a little bit different. But I think once you start to break apart, you know, into regions, and then you start to break apart those regions into different segments or different motions, when you start to break apart, you know, like new business versus expansion, things like that. Once you have multiple flavors of different kinds of reps per region, I think that's a really good time to start thinking about it. I'd also say like, the earlier you start that journey, the better. And I think for a lot of us, that hasn't been an option in the past to kind of start earlier. We were stuck with spreadsheets. But I think just think about how you do it today, right? Like when it gets to planning, it gets to territory carving. The first thing you're going to do is open up your spreadsheet from last year, make a copy, change the year and the title, and kind of start over. And so if you're doing that in a tool that's, you know, more purpose-built, more streamlined, it's just going to make your life a lot easier. So, yeah.
Fantastic. All right. Appreciate y'all hanging out for an extra few minutes. We've got an upcoming event here at Captivate IQ called Captivate. It's a one-day only special event here, and you can learn more about it online, or you can scan our QR code. We'll wrap it there, guys. I just want to say thanks again. Really enjoyed the conversation. I learned a ton from you two. I'm sure our audience did as well. So thanks for being here. Thanks everybody who came and spent the last hour with us. And good luck with your planning seasons here. We'll talk soon.
Thanks, Jonathan.